Welcome to today's section. Today's video, we'll be looking at what is forex and also be looking at the instruments that are traded in the forex market. So without wasting much time, let's go straight to the topic of the day. Now, when they ask what is the meaning of forex, let's look at some definitions of forex. Now, when they ask forex simply means foreign exchange. So they just use the abbreviation of foreign exchange to be forex. So simply put, forex means foreign exchange. Now it refers to the decentralized global market where currencies are bought and sold. Refer to decentralized global markets where currencies are bought and sold. It is the largest and most liquid financial market in the world, and an average daily turnover exceeding $6 trillion. So what this simply means is that it's the most largest financial market in the world. With the access of internet, you can trade wherever you are. You can participate in this financial market wherever you find yourself on this planet. So a daily transaction that happened in the forex market sum up to $6 trillion in total. Its participants range from large financial institutions and corporate bodies to individual traders. So big financial institutions such as hedge funds, corporate bodies to individual traders like you and I. The forex market operates 24 hours a day and 5 days a week across major financial centers worldwide. So from Monday to Friday, you have the liberty or you have the access to the forex market. You can trade 24/7 a day. Just that market closes on Saturday and Sunday. Now let's look at what is traded in the forex market. First thing that we're looking at is currencies are the major instrument that are traded in the forex market. So when you take the forex market, the major thing that they do or trade in this market are currencies. So we have different financial markets. We have the stock markets, we have the indices, and we also have the forex market. So when you talk about the forex markets, the only instrument that is traded there is currencies. So at times we trade commodities such as gold, oil, and other stuffs as well in collaboration with the currency pairs. Traders engage in buying and selling currency pairs with the aim of making a profit from the fluctuation in exchange rate between those currency pairs. So what we as traders do in this forex market is that we engage in buying and selling of currency pairs. So as we are buying, as one person is buying and one person is selling, so we are making profit in the fluctuation of the exchange rate between those currency pairs. I will explain this when we get to the currency that are traded or how to calculate a pip on the forex market. When you get to that part, I will explain better what I mean by exchange, the fluctuation in exchange rates between those currencies. So now, examples of currencies that are traded in the forex market. We have the Euro USD, GBP USD, USD CAD, AUD USD, GBP, JPY, USD, JPY. Now, one thing that you have to note is that these currencies, they are abbreviations. So the first two letters represent the name of the country, and the last letter represent the currency of that country. So when you take the Euro USD, for example, The EU represents the country, but for this particular one, the whole three letter represent the name of the country, and the whole three letter represent their currency as well. But when you take the GBP USD, the GP represent the Great British, and the P represent pound. When it comes to the USD, the US represent United States, and the D represent the dollar that is Spain. So that is how come they have these abbreviations. We also talk about currencies where I will explain better the meaning of each of these letters as we move along. Now, the forex market offers a vast array of currency pairs for trading, categorized into three major types. So we have the major currency pairs, minor currency pairs, and the exotic currency pairs. We'll be looking at them each after the other. So when you take the major currency pairs, we have certain currencies that we consider them to be major, certain currencies that we consider them to be minor, and the exotic currencies based on their economic or how they are actively traded in the forex market. So the three categories of currency, we have the major currency pair. So this currency pair involves the world's most actively traded currency. So the world most actively traded currencies. So for example, when you take the United States dollar, almost when you go to every country, people are trading or people are mentioning figures in United States dollar. It is the most actively traded currencies in the world. Now, they let's look at it. They include US dollar, euro, Japanese yen, British pound, Swiss francs, Canadian dollar, Australian dollar, and New Zealand dollar. So looking at these currencies and comparing it with the economy, you will see that the currencies here holds the world largest economy. These countries hold the world largest economies. So they are considered to be the major currency pairs. Now, examples of major currency pairs: when you are trading the United States dollar against the Canadian dollar, when you are trading the Great British pound against the United States dollar. So these are examples of trading major currency pairs, or these are examples of major currency pairs. We have a lot of them. Now, let's look at the minor currency pair. These currency pairs are also known as cross-currency pairs. These currency pairs exclude the United States dollar and involve the major currency against each other. So over here, you will not include the United States dollar, but it involves other major currency against each other. So let's look at some examples. We have the euro against the pound, the Australian dollar versus Japanese yen, the Great British pound against the Japanese yen. So we can have series of pairs using the major currency pairs without the United States dollar. Now let's look at the exotic currency pairs. These currency pairs consist of one major currency and one currency from smaller economy. Example include United States dollar versus South African rand, the United dollar versus South African rand. Or another example is Great British pound against Ghana cedis. Great British pound against Ghana cedis. So you can see that the first currency, when you look at their economy, they hold a bigger economy, and the second currency hold a smaller economy. So that is how come they are classified as exotic currency. And when you are trading this exotic currency pairs, there are not much volatility in the market as compared to when you are trading the major currency pair and the minor currency pairs. So note, when you want to take a currency that you trade in the forex market, you should focus on the major currency pairs and the minor currency pairs, because those markets contain momentums, or the volatility in the market is higher than the exotic currency pairs. Now, That brings us to the end of today's section. But before I leave, please make sure that you subscribe to the channel so that whenever I upload the next episode or the next part of the video, you will be able to have access or notified. Don't forget to also click the bell icon and give thumbs up for the YouTube algorithm. See you in the next video.